Welcome to Market Matters. I'm Nadia Hassan together with Charlotte Chong. It is Wednesday. It's a rainy Wednesday. And we are still looking for the owners who left their 3747s in the KLCI car park. You know, the fact is, it's a joke, right? Because every time we're on the cover of either CNN or BBC, it's always for bad news. It's either we're throwing people in jail for their alleged sexual practices, keeping them out of jail for their alleged sexual practices, bringing them home despite their illegal sexual practices. Seriously.
I think it's ridiculous because who would actually leave their, airplanes in the car park?
So apparently the three of them, they put out ads for these planes. And every single person, every single site's made a joke of it. They felt like, if you're missing your 747, we may look in KL. Anyway, in 14 days, if they don't claim it, I suppose they'll have rights to it, right?
To sell it, yeah.
Yeah, you wonder, right? If a missing ticket at KLCI car park costs about $100, this must be that times a million.
Times 365 days, I guess.
Most likely. Anyway, so moving on to our market of the day, missing planes aside, and we're not missing planes, sorry, left planes aside, we are looking at KLCI finished 0.59 lower at 98 points to 1659.36. This is following yesterday's trend as well because we actually closed lower. Top losers, BAT, Top Glove, and Hapseng. The top gainers, on the other hand, were who?
MPI, Shangri-La, and Magnitech. Total volume was at 1.66 billion. Total value of at 1.82 billion ringgit. Now, ringgit actually weakened to 4.27 today. TA Research came up with a report this morning saying that the index should stay range-bound with a downward bias because investors, they are adopting a wait-and-see attitude of what is going to happen next week.
Well, they actually call it clueless market direction. It sounds like that. It's not the nice movie with Alicia Silverstone. It's that kind of stuff. And the thing is, yesterday was a huge hit for the commodities. China data still continues to affect everybody. I feel that's going to color the week. They were actually down on crumbling oil prices, although both Brent and West Texas did a little bit uptick, but I mean little, like literally very, very little, 0.59% around there. Data on Wednesday showed slower demand from the China factories. They're still in contraction. PBOC, which is the People's Bank of China, actually put the midpoint rate for the yuan at its lowest level in 4 years. How did this affect Shanghai?
Well, November, before moving on to Shanghai, November PMI was actually at 49.6, which is actually lower. Shanghai index up 0.07%, pretty flat. Nikkei down 0.98%. Now, investors overall, they are very cautious, on risk asset of what is going to happen next week. When I say next week, probably US Federal Reserve is going to pull the bullet, and they are going to raise the interest rate.
Before Christmas, of course. Japan's finance ministry will apparently ramp up issuance of its government bonds in the next fiscal year. Nikkei down 0.98% on that. Moving on to our hot stock of the day, we're looking at something that our colleague Suhi actually went for yesterday. KUB Malaysia Bhd, up 3.51% to 29.5 cents. Actually, to be fair, when we're picking hot stocks today, it is so difficult because the market is so dead. I think it's dead to a point where everybody's just gone off and had
Exactly. We don't really see a lot of momentum in the market, isn't it?
Yeah,
now, shares actually up to intraday high of 30 cents today on expansion plans. News on the company. The company is actually looking to acquire assets in the information, communication and technology, power and plantation sectors. Now, we know that the company actually, they are going to pare down this company, A&W Thailand Company Limited, to a Thai guy.
Yeah, whose name I think you're not going to try and pronounce. You digest it while I go on about the fact that, yes, that was what they're announcing yesterday. Yeah. But let's not forget, right, KUB, what do you call it, malign KUB, has gone through several restructuring plans over the years. This is the company that will not die. I mean, I'm not saying that we want them to die, but shouldn't I have some of these plans stuck? And obviously, their group MD said, look, his goal is to ensure financial sustainability. Let's not forget, a few years ago, after the restructuring plan, they had some balance. They wanted to keep their core segments, including food, but A&W, I don't know. I think selling it, is this the way to resolve your company? Sell it off piece by piece?
I think the reason why this company never died because it's heavily backed by the government. Minister of Finance Incorporated owns about 22.55% stake in the company. Now, other than acquire new business, the company is actually also looking at doubling their plantation land bank within next 2 years, and they are allocating about 300 million to fund the acquisition.
Well, if you look at their earnings, it doesn't seem that they're in good stead. 33.3% down on the top line. They actually slipped into a loss for their latest quarter. I think you'll have to do a lot of stuff at home before you can even talk about doubling your land bank. I mean, just selling things off piece by piece to KUB Malaysia Bhd, is a Thai national. It's I don't know if this is going to solve their problems. Do you think it's going to solve their problems, honestly?
Honestly, I myself, I'm a big fan of A&W, and I probably the reason why they are paring down these subsidiary because they don't see a lot of income coming from this revenue stream.
Yeah, I suppose it's very competitive. But anyway, just to wrap it all home, while we think of Coney dogs, shares up intraday high of 30 cent on expansion plans. Apparently, they want to acquire assets in the info, ICT and technology and plantation sectors as well. They're selling off A&W Thailand. They're hoping to shore up, and their MD seems to be very doggedly determined that everything is going to be all right. Stocks with momentum is next on our list. We're looking at, I do know how to pronounce this, EITA, down 1.34%, although it was up a little in the day. Pegged as negative momentum by the Edge Research. These guys do EITA Schneider elevators, and they call it bus ducts for Futurec. They make elevators, essentially. Lifts, if you want to be Yankee about it. But yes,
this company, EITA, they produce elevators or manufacture elevators that can go up to 50 floors. But when you compare this brand with other big brands like Otis, it can actually handle up to over 100 floors.
You know what smart buildings do these days? I love it. I've seen it in Hong Kong and I've seen it in Singapore. You don't have an up and down button. What you have is a pad to insert what floor you want. And the 6 lifts will calculate. You know, so you will never guess. Your lift will, so what they'll do is the program will calculate the most efficient path. So let's say if somebody wants like floor 10 and floor 20, they'll pick you up only. So it's ingenious. I love this kind of thing.
So I think they will segregate people who wants to go to certain floors.
Yes, exactly. It's
a good idea.
Genius. You wait less. But what the Edge Research has said, because of its negative momentum, right, it has gained 33% since declaring that 2-cent dividend and the announcement 2 weeks earlier. What they said was, if you look at the earnings now, I mean, impressive, 190.3% up on the bottom line. But the reason for that, as they're saying, is because they actually had what they call fair value gains on forward exchange contracts. Essentially, it's a forex accounting thing. Without it, actually, the profit before tax would have only been about 8.3%. So I think it's just an accounting term as far as I can tell. Yes, you think because of the ringgit and how it is now, your future contracts will actually, of course, be on a high grade because the ringgit's gone down the crapper.
Now, looking at their main business segment, manufacturing elevators and bus duct systems, this actually provides the company about 88.9% of its FY 2015 revenue. Now, revenue from these two has actually increased 50% from 2010 to 100.86 million in September 2014.
But obviously, they think that it's overrun, isn't it, if you're looking at negative momentum. But anyway, we are just wrapping up today. We're looking at EITA. And the reason why we're looking at them is because, of course, they're pegged with negative momentum by the Edge Research. Apparently, they've gone up 33% in the share price since their announcement a couple of weeks ago. However, because it was due to sort of fair value on other contracts, it wasn't, the main core rise was not as much.